Good morning and welcome to Bloomberg Quint, India's first digitalized streaming business news service. You're watching Indian Open. I'm Neeraj Shah. Good morning, Ira.
Good morning, Neeraj, and a very good morning to all of our viewers. Welcome to a brand new week. Let's get you the headlines. The Syrian government is said to have used chemical weapons on a rebel stronghold. This morning, news coming through of attacks on an air base in Syria as well. North Korea confirms its willingness to discuss denuclearization of the Korean peninsula when Kim Jong-un meets Donald Trump. Foreign investors can buy more Indian debt after the Reserve Bank of India raised the foreign investment cap in corporate and government bonds on Friday. Net inflows into equity mutual funds fall to a 13-month low in March. And Lemon Tree Hotels is all set to list this morning on the bourses.
Well, let's take a look at the trade setup for the day. Needless to say, the US markets have already shown the way in which we are likely to trade. I think the jobs data, which was fairly disappointing, trade war fears, all of these pulled the US markets lower in Friday's session, and you would expect an encore of sorts, though I must say that Asia is trading far more respectfully than what we would have otherwise anticipated. The SGX Nifty has about 1/3% kind of a downtick. The other markets are flat, so it's actually a flattish start. 1/3% could very well qualify as a bit of a flattish start in the session. Now, the last week ended with broader markets showing strong gains. While we had the large caps pulling in about 2% kind of a gain, the Nifty small cap index for the week had about a 5% kind of a move, which was very, very strong. So that just showed the kind of momentum that came into the broader markets with the Nifty stabilizing a bit, though it was very, very choppy and volatile. You would remember Wednesday and the kind of pullback that we had that day. There was some short covering on the FI desk as well. I'm sure a bit later on in the show we'll talk about it. But a fair amount of shorts on the index and specific stocks still very, very intact on the FI desk. However, unwinding was seen in the 10,400, 10,500 call option seen. And I think Ida will have a lot to say about this, but the possible impact on yields might be seen on the banking stocks today as well. So the Bank Nifty was extremely active the whole of last week, and let's see if that activity continues at least in today's session, if not going ahead. What to watch today? I mean, I think the markets look forward to kickstarting the earnings week. This Friday we'll have Infosys, IndusInd Bank will be amongst the key ones to start off earnings as well. A clutch of other mid caps and small caps to watch out for. So do watch out for earnings. It kicks off in full earnestness this week. And of course, for today's session specifically, I think subdued Lemon Tree listing is expected today. The issue just managed to scrape through. Don't think there'll be too many fireworks on Lemon Tree, but we'll talk about that a bit later on in the show as well. So that's something to watch out for today. Amongst the stocks to watch, I don't know if there's an impact on this one immediately today, or we see an impact when the decision comes about, if it does come about. But there was some, the Twitter was active with news of the Commerce Ministry convened a meeting on 11th April of all stakeholders to discuss the FDI in tobacco, whether it's a for or against, and the quantums will all have an impact on the listed tobacco company space. So Golden Tobacco, ITC, etc. will all be in focus. Amongst brokerage notes, I thought Deutsche Bank research on Kotak Mahindra Bank, they've upgraded the stock to a buy from hold. They've raised the target price to 12.80. They're saying, yes, it's an expensive stock, but quality comes at a price, and the growth momentum is improving. The liability strategy for Kotak Mahindra Bank, according to Deutsche Bank markets research, is paying off. The stock has had a bit of a run up the last few days. Let's see if there is more in store. And RCom could well be in focus. The Times of India is saying that the Systema JSFC reluctant to buy RCom subsea cable arm as well. This one tends to react to all pieces of news. Let's see if it does react to this one or no. And then, of course, a clutch of other names as well. Ida, I think, of course, I'm sure you will talk about it on first word, but bond yields will be the key focal point today.
Should be. I think there's a possibility of them perhaps even moving below 7 if all things go well. I mean, not today, but the direction could take us there, maybe or maybe not. We will talk to Vivek Rajpal and get an expert view. And that is our first topic here on First Word. We'll talk about the FI debt limit hike, both on corporate bonds and on government bonds. Corporate bonds a bit more interesting because that hike has come in after 5 years. So we'll discuss the implications of that. Vivek Rajpal of Nomura will join us. And of course, full focus here on earnings. Darshan and Neeraj fill us in on what to expect from the earnings season and what it could mean for the outlook for the markets. Let me actually kick it off with that FPI limit hike. We got the announcement late on Friday. It hadn't come in with the policy, so there was some nervousness that perhaps the Reserve Bank of India has decided not to hike limits, but they have. So Friday evening, they came in and put out their tables and gave us a sense of what they're anticipating. Essentially, they're more or less moving along the path that they had set out way back in 2015, which is that we will increase this in a staggered fashion, and we will increase it based on a percentage of the outstanding. So if a percentage of the outstanding was 5%, now it moves up higher than that, and it gets increased in half-yearly doses. So on the GSEC general limit, as you can see, you go from 1.91 lakh crore to 2.07 and then 2.23. The SDL limit remains unchanged. In any case, there was very little sort of interest on the SDL side. Those limits were hardly taken up. The corporate bond limit has been hiked after a while. So you go from 2.44 to about 2.89 lakh crore. Just to give you a sense of what the Reserve Bank of India is doing, they have essentially said that they want to increase the foreign investment limit in a manner where if there is excessive volatility coming in from foreign shows, the domestic market is deep enough to try and absorb the impact of that. So on the GSEC side, perhaps there is a sense that the market has continued to deepen, and it has to some extent because of the flows into debt mutual funds, etc., which then get moved into the GSEC market. And on the corporate bond side, like we said, it's been a while since they've increased the limit, so perhaps it was justified to some extent. Let me get across to Vivek Rajpal, who is India fixed income strategist at Nomura, joins us on the phone from Singapore. Good morning, Vivek. Thanks so much for taking our call. Did the pace of increase in the FPI limits, keep pace with what you had expected?
Well, expectations were, there was a wide range of expectations. I think the increase is probably on the lower side of expectation. 0.5% per year is, having said that, 0.5% per year increase, if you really look into the numbers and assume a current utilization stays, then it still brings approximately INR 500 billion for the full fiscal year, which is 10 to 12% of 12% of total net supply. So it should be treated neutral by the markets.
There is also a corporate limit hike, though, Vivek, and I think there was an expectation or a hope that they would increase it, but nobody was entirely sure. So if you take that together with the government bond hike, there is a substantial amount of room now, right, for foreign money?
Yes, absolutely. So if you look historically, if you look from a total perspective, GSEC plus corporate bonds, etc., the total increase in limit is decent enough, and even in good years, we have got this kind of a money for full year. So overall, it's positive. I'm just saying that if somebody has had elevated expectations of 1% per increase per annum, that it is less than that. But overall, I think it's neutral to a medium-term positive for the market.
On the government bond side, Vivek, I would assume that interest would have been back. There was a short period of time where FPIs were selling, but I think with the factors which have changed, lower borrowing, etc., it looks like FPI interest would be back. So you would expect that limit to more or less get used up as it gets opened up?
Absolutely. I think FPI as an investor class will continue to increase its exposure in Indian bonds, and it will become increasingly important investor class for Indian bond markets. Yes, I expect utilization to increase as we go ahead in the year. I think the kind of selling that we observed for a brief period of time was temporary, but with supply-demand issues getting resolved and authorities becoming proactive, along with the fact that inflation trajectory seems to be panning out favorably. Global markets are more or less conducive for the rates environment, suggests that FPIs will continue to buy.
Vivek, could we move closer to 7%, back to 7% on the 10-year?
So near term, my range expectation is 705, 725. But based on the inflation trajectory, yes, if inflation continues to remain benign, I'll not be surprised to see 10-year bond yield closer to 7% in a month or so.
Vivek, last word, slightly, sort of pointless question, but I'm going to ask it in any case. No interest from the FPI community on state development loans at all? I mean, I continue to argue that none of these states have actually defaulted. So while I know that there's problem of data visibility, etc., on state finances, it could make for an interesting investment for FPIs.
Well, yes, but as you said, I mean, first of all, I think there is no differential pricing between various states at the moment. And in terms of liquidity as well, G6 or central government securities are much more liquid than SDLs, which is why I believe G6 will still be a preferred source of investment for FPIs. As market develops, as market pricing mechanism gets mature, and as liquidity in the market improves, SDL may become a choice of instruments, but probably not in the near term. That's more of a medium term.
Sure. Vivek, just a last question. I think between the government's decision to cut first half borrowings, the RBI or the MPC's decision to bring down the inflation forecast for the year, spreading of MTM, and now FPI limits being increased, looks like the bond markets have pretty much gotten what they wanted. Do you see generally, the first half borrowing program go through smoothly unless something untoward comes about? I think Friday's auction went off pretty smoothly.
Yes, actually I'm pretty constructive on bond markets, and I'm not constructive just after this news. I was hopeful that supply-demand issues, which were really the technical issues, will get resolved. I think fundamentally as well, the way things are panning out, I am pretty constructive on the bond markets. I mean, historically, if you see, Indian bond markets haven't commanded as much term premium as they are commanding now. So relative to repo rate, we are still like 115 basis points above the repo rate. My sense is, given that authorities have become proactive and valuations are still attractive and fundamentals like inflation are panning out in the right direction, H1 borrowing program or H1 borrowing bond supply absorption shouldn't be a problem at all.
Got that, Vivek. Thank you so much for taking time to speak to us, Vivek Rajpal of Nomura there. Quite a turn in about 6 odd weeks, actually less than that, about a month in the mood in the bond markets.
Yeah, 7.8 or thereabouts, or heady levels.
To talk about 775 and
775,
talking about 7.
Sub 7.
Yeah, I think, if there were bond vigilantes in India, they've certainly won this battle.
Certainly. Ira, just one quick point. All through this, uptick in yields, the conversation has been about how high the borrowing cost for corporates has been. So irrespective of what the RBI does, corporates are anyways borrowing at a higher rate. That was the conversation at 7.7, 7.75. Now that we are looking at the lower end of 7 and with FPI investment in corporates being allowed as well, is that a sigh of relief for corporates at large? We typically tend to only look at banks, they'll benefit, but corporates at large?
Yeah, no, I think so. I mean, your benchmark rate comes down. So, unless there's a reason for the spreads over benchmark rate to go up sharply, which I don't know if they are, they typically go up if there's sudden, spike in credit quality concerns. Credit quality concerns are there, but I don't know that they have spiked. So, if your spreads remain more or less what they were, then, obviously you come down a little bit for sure. So, yeah, I think generally relief for the government, relief for corporates, relief for NBFCs, etc., which I know Shraddha has been saying, just calms the waters down.
But sub 7, you believe the trajectory could be there?
I think Vivek was saying in about a month he would expect it to come in that range, 7.705. So it's a possibility. I know Jayesh Mehta, Bank of America, Merrill Lynch, about 4 or 5 months back had told me he still thinks yields will come back to 6.75, and I was telling him, sir, what are you saying? He may be close to being right. Well,
yeah, let's see. Long-term predictions. Jayesh Mehta on yields, Nikar Mishra on the repo rate as well. Let's see if all of those comes out to be true. Anyways, so that's as far as banks go, could be the focal point. NBFCs could be the focal point as well to this, so keep a watch out for that. Now, the next big and long piece is how will the Q4 earnings season shape up? Remember, we kickstart earnings in full earnest this week. Infosys and then a slew of banking names as well. But Darshan is bunched up what different sectors could do during the course of this earnings season. Q4 is probably the most important Q4 that we've had in a really long time. Darshan, a bunch of sectors, let's break them up. Let's start off with the first couple of sectors. What are brokerages saying?
Yeah, so basically what has happened is that, almost brokerages have started coming out with reports. So we've compiled 8 to 10 to get a view of what brokerages are saying. But just, a recap of what exactly has happened from the fourth quarter last year to the third quarter. So the number of strong earnings have gone down from 23 to 13. So that is significant amount of weakness. The last 2 quarters have been pretty much where it's been an inline set of numbers that have come in, and weak set of numbers have remained stable at pretty much 13 to 10. So it's been fluctuating. But the trend is that, it's becoming a very, very inline set of earnings season. And that is what analysts also expect. They don't expect it to be a bad quarter. They believe that the demonetization base has come off. GST impact will be now taken care of. And so probably it will be an inline to slightly better quarter this time around overall. So let's take a look at some of the sectors first. Let's talk about the consumer and FMCG sector. Basically, margins may expand for some of the companies, especially companies like Nestle, USL and Colgate. So that is what analysts are clearly betting on. And the base effect may be waning, which will be impacting companies like Marico, Godrej as well as Dabur, because they believe that the margins, they believe that these companies will report a slowdown this time around. The two most watched companies in the FMCG and consumer space will be Titan as well as Jubilant Foodworks. So these are the most watched companies. They believe these two companies will be able to post the strongest set of numbers. Moving on to autos, what are we expecting to autos? First of all, rural demand is something that is picking up, and that is why the bets will always come out on the two-wheelers as well as the tractor demand. If you see the numbers that came out, volume numbers that came out from Escorts as well as M&M, they were extremely strong. So rural demand will definitely play on. And on the three-wheeler side, if you see the monthly sales numbers, they have been extremely strong. So Hero came out with a 7 lakh plus monthly sales number. So Hero is expected to do extremely well. Bajaj, they're betting on the three-wheelers, not the two-wheelers mainly. For Royal Enfield, the capacity ramp up is something that will help. And for TVS, it's the premiumization. Low base has been, low base due to demonetization is clearly been seen. JLR's numbers may hurt Tata Motors this time around. It's been a marked underperformer and JLR has not been performing for them. Maruti may report a steady set of numbers this time around. So this is what we are expecting from the first two sectors.
What about IT? What about financials? Those are the heavyweight sectors. Yeah,
so financials is something that, everyone will watch out for. First of all, overall, just a broad view, CV financials and home loan firms will give out strong set of numbers this time around. That is what they are betting on. Banks will be extremely important. Fresh slippages and low treasury gains this time around. Now for PSU banks, everyone is anticipating that most of them will report losses this time around. So that is there because of, NPL that they have to report, as well as treasury gains which have evaporated because of the bond yields have there. Apart from it, in the private sector banks, they expect strong set of numbers, except for the two problem childs, that is ICICI Bank and Axis Bank. They expect weak set of numbers from there. But the others, the HDFC Bank, Kotak, IndusInd, Yes Bank, they expect fairly decent set of numbers that could probably come in. And for life insurance, value of the new business margins will definitely improve. So they expect a strong set of numbers coming in from the life insurance companies. Coming to, IT companies this time around, new orders will something that will aid mid-caps. They expect the mid-cap IT to outperform the large cap this time around. And all eyes will be on the FY19 guidance, the commentary, what they expect. Basically, in terms of dollar revenue, they expect HCL Tech to have the highest growth, and they expect the lowest growth to come in from Wipro. BFS segment commentary in TCS and the growth is something that is extremely important. And Infosys, they'll watch out for what the new management has to say in terms of guidance. And pharma, what is expected this time around? Basically, margin pressure, margins may expand for the domestic companies. So they have, which have focus in India and growing in the US market. So Cadila and Cipla is where they expect numbers to come in very strong. For the US-based firms, there will be serious amount of headwinds that will come in. So this is expected from these three sectors.
Very interesting. I know of one IT firm, though, will not give out good set of numbers. That's Persistent Systems. They've already declared that. And it'll be interesting to see what banks do. While I agree that treasury losses will be the focus, but I think everybody will now start talking that, hey, that's a thing of the past. Q4 will, or Q1 FY19 could well see a bit of a reversal of that as well.
No, besides, I think it's going to be really tough to predict bank earnings this time, right? Because you can write back up to 50% of your Q3 treasury losses. So it depends on every individual bank whether you choose to do that. Because you're allowed to spread over 4 quarters right now. So Q3 and Q4 you have to take, but you have the option to write back the 50% if you had taken it in Q3. So does an individual bank decide to do that? Q4, you would have made trading losses in the first half, so there would be those trading losses, but you may have a mark-to-market positive when you close your books. Then you have been allowed to actually write back some of the provisions on the NCLT cases because it was 50% earlier, now it's 40%. So if you're taken more than 50%, you have the option to write back some of that. There are just a lot of variables. I'd be surprised if any banking analyst can, sort of hit the dart right in the center on bank earnings.
Or give leeway to banking analysts because you just don't know what will banks do this quarter around.
That's just too much uncertainty.
Yeah, but I think this is a nice summation of what some of the key sectors will do. And now, Darshan, a very important part, economy-facing companies, because managements have come out and said that things are improving. Are brokerages saying that it will show in the numbers?
Yeah, so basically, if you put out capital goods and infra, in terms of that, they expect infra to do well, not capital goods. So basically, execution has been better. So on a quarter-on-quarter basis, even capital goods may show some bit of improvement, and new orders have come in. Now, if you saw what happened in the fourth quarter is usually the strongest for infra company, and the largest is L&T. This time around, most of the reports that have come out have indicated that L&T will come out with an order inflow which is much higher than what they have guided for. So L&T will be strong. The infra companies will do well. Order inflow has been rather weak for companies like Engineers India, Bharat Electronics, BHEL. So capital goods as a space will not do that well. So basically this is it. These are the main sectors, but we have a comprehensive copy on our website, bloombergquint.com, where we've listed all the sectors, in fact, what the major expectations are. So our viewers can log on to bloombergquint.com and click on the article that says what are analyst expectations from the fourth quarter, and they will have a much comprehensive view on what is expected.
Yeah, this article is on the homepage. Log on to bloombergquint.com, and the first two articles, one of the articles is here is what analysts expect this earnings season. So do log in to that as well. Darshan, thanks for putting all of that into perspective. I just had a small note to add in the end. Now, looking at all of this and what it could do, I was just going through what Q4 earnings overall could look like. So if indeed we have a PAT growth of about 14% that's what 3 or 4 of the brokerages were working with. A potential PAT growth of 14% would end up being the highest quarter PAT numbers in the last 15 quarters. So that's one statistic. And if indeed we have about a PAT growth of 14% or thereabouts, or even 15% could lead to about 11% earnings growth for FY18. This is not in the higher double digits, but it's probably better than what people were working with midway through the year, wherein everybody said that, oh, we started off at 20%, we could end at about 7 or 8%. 11% is something that people would probably take with both hands, considering that banks have been a bit of a yo-yo. And just a final piece on the valuations as well. If indeed we do get a 14% PAT growth in quarter 4 and therefore 11% PAT growth for the year, this is what we look like. FY18, the EPS at 462 with 11% PAT growth, which means we traded about 22 times. We typically tend to look 1 year forward numbers and not the trailing numbers for valuations. FY19, if we get 23% PAT growth on a low base, albeit yes, but if we get a 23% PAT growth, that takes our PAT numbers or EPS numbers, the Nifty EPS, this is the Nifty EPS, keep in mind, to about 568, 570 odd. It's still shy of those stall 600 kind of numbers that people were making, but at 568, 570, about 18 times, you're not in the terribly expensive range. And then you hope for FY20 clocking another 20 odd % growth and we're reaching about 675, 680 kind of numbers, and therefore we're trading at 10,300 around the 15 times. Tell you what, in a couple of quarters time, people will start talking about FY20. That's not about too far out, but just 4 or 5 months out. So we need to see if Q4 delivers that 11%, and then the management commentaries indicate that we'll have maybe about a 20% growth or no. Let's just wait. 4 years or 5 years, people have been predicting 18, 20% and have come off. I think we made enough comments.
Yes.
Maybe, just maybe FY19 could be the year wherein they predict something which could more or less turn out to be right.
Wait and see, I guess. That's the only way.
Wait and see. Yeah, wait and see. But I think banks remain the focal point in today's session. Banks and NBFCs, as Ida said, that's all that we have on First Word today. But stay tuned to Bloomberg Quint. We'll discuss what to do about investment opportunities in a scenario like this with Shibani Sircar of Kotak Mahindra AMC. Gautam Singhania talks about Raymond's second coming in an interview with Menka. That's coming up at 9:30. And since banks are the key focal point today, we also touch base with IDBI Bank and discuss their strategy to bring down NPAs from the highest in the industry. KP Nair will join us later on in the show. For now, though, we take a break. Full tilt towards the day's trade on the other side.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open with us on Bloomberg Quint. Let's quickly do a check of the Asian markets. Remember, we started off the day when the Asian markets were trading in the red, considering the handover from US markets was not so good. Reason being the non-farm payroll data was below estimates, and also because of the trade war fears brewing between US and China. But there's been a sharp recovery, actually. The Japanese market currently trading in the green. Hang Seng now trading with gains of nearly 0.5%. Shanghai is currently just mildly in the red, but SGX Nifty has recovered most of its losses, still showing a downtick of nearly 31 points, but still it is trading above the mark of 10,300, which is above 100 points above the 200-day moving average. But it was largely a flat session on Friday, though the week was pretty good. Let's head across to Agam Vakil to find out what sort of FNOQs we are getting today. Hi Agam, good morning.
Good morning, Navneet. Well, you know, we did see flat Qs coming in as far as the Nifty is concerned. Very little change in open interest for the Nifty futures. It's the same for the Nifty Bank futures, where we did see a little bit of unwinding but however, overall, you know, when it comes to the underlying factors, we really haven't seen too much change, and that's reflected in the India Volatility Index, which has hardly moved at around 14.75. Is the same for the Nifty put call ratio as well, at just about 1.44. What we've also seen is a substantially bigger change in the 10,300 put. That's where we've seen a little more writing in comparison. But you know, we've also had Jet Airways move into the band, so that's one stock which could see restricted trade. And of course, two other stocks that I'm watching out for, which saw a lot of longs building in. One of them was Adani Enterprises, where we saw a nearly 31% increase in open interest. And similarly, Jubilant FoodWorks, where the underlying moved up by as much as 4%. We also saw another 26% increase in open interest towards fresh longs. So plenty of stocks out there which did see a lot of strength. But when it comes to the benchmark indices, again, we just have to wait and watch whether or not we do see it move further upwards from these current levels.
Thanks a lot, Agam, for bringing those FNOQs. Well, largely the range still remains the same for the April series, 10,000 on the downside to about 10,500 on the upside. And Agam did mention about Jubilant FoodWorks. That was the counter which did see fresh longs, and it was one of the star performers of last week. It gained nearly 20 to 25% in trade. On that note, let's bring in Samir Kalra, founder at Target Investing, who's joining us on the show now. Hi, Samir. Good morning.
Good morning.
Thanks a lot for coming by to our studio. I'm going to take that point forward of Agam. He mentioned about Jubilant FoodWorks. Well, historically, this is the stock which has been trading at very high valuations, but it's now at all-time highs. Do you think the risk-reward may not be too much from here on?
See, if you see the IPO listed at 100 times PE, Average has been 100.
Hence I said let's not talk about the valuations.
No, that's what I'm saying. So the valuation on the past 5 years has been 125, 150. Now the plus point, what has happened in Jubilant, as even I mentioned on the Hot Money show, past 2 years they've been heavily putting money in the opening of stores.
Right.
At the down phase of the company and the down phase of the economy in terms of consumptions. And when they stopped doing it, automatically a lot of cash flow started generating on their PAT and on the cash PAT as well. That was the plus from the institution's point of view. The second plus came when the growth started picking up at their stores. There were new stores which came into play. So the same store sales growth, which is around 12%, 10 to 12% today, has stores which they opened 2 years back. So that's the maths which they use. So now onwards, you'll see those old stores kicking in on the higher growth. And the second, the newer stores which they opened in last 2 years in a big number, that also coming on for next few quarters. So I think it'll maintain up and it'll meet the expectations of the institutions.
You know what, this quarter will see the full impact of the GST rate, which was tinkered from 18% to 5%. And one of the brokerage notes said, because of that, it will bolster the same store sales growth, but it can impact the margins.
See, but if you see, the main driver for today's Jubilant Food is the meal planner which they have.
Right.
So they have a program going on. If you order 2 pizzas, it'll be a 99 or a 199. So that has, see, the problem Jubilant faced at a point, the billing of a normal pizza, medium pizza, went to 350 plus. So that was the problem which was driving people out of it. Now he's reduced the pricing and maintained the margins or even increased. I don't think so it'll impact the margins that bigger way because the raw material costs are still in control of them. So they'll be able to tinker with that and manage the maintaining margins if not, because they're having the volume growth right now to support them.
You don't sound convinced. You don't sound convinced.
No, I mean,
you've tracked FMCG for such a long time.
Yes, the brokerage note I was reading, they said, and actually Samir is right, they said that the downtick in margins could be only about 60 to 90 bips, and the factors which have been working out for them, as Samir mentioned, there was a time when they used to give target of opening new stores every year, 100, 125, but in the last 3 to 4 quarters, since the time new management has come on board, we've actually seen stores shutting down. They've started to close down the stores which were loss-making, and that was impacting the same store sales growth as well. And last quarter, we did see that bump up coming in that. Let's see if they can maintain that going ahead.
I mean, to be honest, there has been a clear different strategy that the new management has come in. Yes. I remember when the change happened, everybody was saying, no, it's the nature of the business that is there, and shifting out from Ajay Kaul into somebody else will not necessarily help.
But that was not the case. You have to give the credit to the management. They've actually managed to, increase the same store sales growth, which was reeling under pressure for the longest time for the company. And actually, that's the growth driver. That's the key metric which everyone watches out for.
Yeah, for sure. Okay, and I'm sure we'll talk about this stock in the huddle as well. But I just want to still take on that conversation since we're talking about consumption. Titan, with the release that they have given. Now, again, an expensive stock. I was trying to look at the RSI indicators, and typically every time Titan is veered above that 50-day moving average, it's come off. This is a 5-year history wherein Titan has done that. This time around, it's not really hit those averages. So on technical parlance, it's doing a lot better than what it has done traditionally in the past. No. And the numbers are here, Samir. They're actually delivering good numbers. There is probably a reason for the optimists to feel that you should give a premium to the 3-year average multiples for Titan.
So I'm on the opposite side.
You're on the opposite side.
I'm on the pessimistic side.
Why?
Because see, if you see the businesses, there are 2 major businesses. One was watches, which 5 years ago was the major driver for Titan at a certain point. Then came into...
In terms of watches?
In terms of
top line?
Their focus.
Okay.
Watches was at a point a very much high-driven focus for Titan. And jewelry was something which they were building up on.
But that still remains the main driver.
Yeah. So now what has happened, all of a sudden people have started focusing on jewelry. Because out there the competition is seen as a, almost like a no competition zone. And they have a monopoly over that. But what we feel internally, until unless you have a technology benefit in the whole system, this doesn't last long. As in your premium of valuations, see, because what happens right now, you're getting the benefit of the competition getting out of your system. They are very good in what they do, but it's just that kind of a valuation from our side given to a jewelry stock. We really don't enter into jewelry stock as such.
Here's my question to you, Sameer. Do you see earnings growing at a certain run rate over the course of the next 3 or 4 years? And if that is the case, if the number is high double digits, 20, 22, 25%, why is there a hesitancy to give it a high PE multiple?
See, the only hesitancy comes because when the whole street becomes optimistic about anything, as in, see, future is very uncertain. Now, the only thing I can do is I can extrapolate what they've done in the past and give them a certain valuation. But my only problem is if there is any scope for disappointment. And the stock, as you said, reacts
your only hitch is valuations, because in terms of fundamentals, looks like everything is in place.
My hitch is what stops from anyone else coming into play and taking
stops also because what's happened in the recent past now, the working capital issues with which other jewelry companies are facing post the Nair.
See, the only point is, if you talk to jewelers, which I do quite often, there have been doubts on the client side now onwards, that what you're selling, is it even genuine or not? So there has been an impact on the total sales. I understand Titan has gained the share, but the whole overall industry is suffering. So it's not that the guy who's going to a Gitanjali Gems now goes to Titan. I hardly doubt that. Because the only point is you cannot attract just because the other guy has done something wrong.
Yeah, but the press release definitely stated that there is a scenario where market share from organized is also shifting
that
now.
Will be in the certain sense where they're opening new stores and they're capturing the share where they were not present. But is that market share coming out from someone else doing something wrong? That they cannot define.
No, but just to play the devil's advocate to Sameer, I think the management said that they are enjoying the benefits of the market share coming back to them from a lot of other players, one, and two, to the point of somebody else coming in and emulating Titan. I think it takes a really long time to build the brand image that Tanishq has. And for a new player to come in and suddenly get the trust of the people, for which they charge a premium on Tanishq, by the way, compared to others. I don't know, I just find it difficult to believe that somebody else can emulate the strategy in a hurry.
See, but the only point is, internally, if I hold Titan and can I have a better sleep at night and forget about something not happening? I don't think so. That's not our internal view. So we are not
the expert's view.
Okay, we'll be watching out for Titan. In fact, the company did state that they've given out how the performance of the December quarter and also FY18 has been. But besides that, there are a whole host of other stocks which our research team will be talking about, which are the stocks which they will be watching out on back of some news and also some brokerage note from ICICI Securities, where they've maintained their outperform rating on a bank like Yes Bank. Good morning to three of you. Shraddha, let me start off with you with stocks and news today.
So Navneet, so I'll start off with Tata Chemicals, which has made a smaller acquisition. They've acquired Allied Silica for 123 crores, and this also includes an existing manufacturing site in Tamil Nadu, and all of this is a part of the broad investment strategy that the board had, a strategy and outlook that the board had approved back in Feb 2017 for the specialty business. So Tata Chemicals is yet another Tata Group company, Titan, which you were speaking about earlier. They've shared their Q4 quarterly updates, where they've said that for the jewelry division, which is the most important, the retail sales growth have come in at mid-teens in the quarter. Inox Wind has 100 megawatts in SECI 4 auction. With that, the auction-based order book increases to 950 megawatts. ITI Limited, watch that one. They've received a cabinet approval to issue 18 crore fresh equity shares to the public. Sri Renuka Sugars, they've said they'll divest their Brazilian operations in due course. You have SmartLink Network Systems. Another company has said they will buy back nearly 25% of the company's equity at a price of 120, and that's a good 15% premium to Friday's closing price. So watch out for that name. And you have an ET report which says that HDFC may buy Apollo Munich for about 1,000 crores. So HDFC and Apollo, watch out for both those names. And lastly, another ET report which says that Max India is in talks with its South African partner to buy out their 47.5% stake in Max Healthcare. So again, Max India is another name to watch now.
Thanks for that, Shraddha. We'll be watching out for all those counters. But Nikki, some key bulk deals from Friday's session?
Sure. The first one that we're tracking on the list is AIA Engineering. There you have promoter actually offloading 3.2% equity in the company for a sum of around 419 odd crore. On the buying side, you have DSP BlackRock, which has actually bought a 0.6% stake in the counter. A couple of issues that the company is currently facing, be it in terms of slower volume growth, EBITDA compression, or delayed capital expenditure. Next on the list, we are tracking Apollo Pipe. This is an interesting one where Narayana Murthy backed fund, that is Hober Mallow Trust, which has bought in 0.5% stake in this counter. So do keep an eye out for this one. Also Magma FinCorp, where a couple of mutual funds have actually bought in stake in the company. You have Reliance Mutual Fund, which has bought in 1.8% stake in the company for 65 odd crore. IDBI Mutual Fund, which has bought in stake on around 2% at a sum of around 70 odd crore. And on the selling side, you have Zen Mauritius VC Investment, which has offloaded 10% equity in this company. Who's meeting home? We have 3-4 names there. You have Tata Motors, which is going to be meeting several fund houses from April 9 to 12. That's a 3-day period. Kaya is also expected to meet several fund houses today and tomorrow. And you have Siemens, which is actually meeting in ICICI Securities and IIFL Holdings today. Radico Khaitan also is expected to be in focus on account of meeting several funds houses in the next 3 days.
Okay, so a lot of companies are going to meet some fund houses, but Saloni, ICICI Securities seems to be bullish on Yes Bank.
Yes, so ICICI Securities remains bullish on Yes Bank. They reinitiate buy on the stock with a target price of 464 rupees, which implies a potential upside of nearly 50%. Now, they believe that there is high growth opportunity for Yes Bank given their growing balance sheet, while new exposures to large corporates along with refinancing opportunities in few NCLT cases remains key near-term positives for the company. They believe that retail segment will expand across the balance sheet, and hence they expect their loan book to grow at a CAGR of 30% over FY18 through FY20, and they expect their return on asset as well as return on equity to expand to 1.9% and 22.5% respectively for FY 2020. Now, second up on brokerages, we have IDFC Securities on GMR Infrastructure. Now, they maintain outperform rating on the stock, and they have raised their target price to 28 rupees from an earlier of 22 rupees. They believe that airports business is on an upswing with a strong traffic growth, and they expect energy operating plants to improve going ahead. And they also believe that the mining business for the company remains a key positive. And lastly, they believe that capacity expansion and value unlocking will help GMR Infrastructure to reduce its corporate debt significantly.
Okay, some bullish call coming in on GMR Infra as well as Yes Bank. Thank you very much, all three of you. Sameer, I want to talk about Tata Motors. That was the top performer in last week's trade. Finally, we saw, the stock inching up, because so far most of the analysts have been saying that it is the cheapest Nifty constituent which is available. And obviously, the March monthly sales number were good for across the board. But what about Tata Motors? If somebody wants to play the auto theme in the large cap space, should this be the top stock?
So we are positive on Tata Motors at a certain level. This is given because, see, there'll be two triggers. One is the domestic CV cycle, which is a big trigger. And because, see, Bharat Stage 6 will start coming in 2020. So we maintain that this kind of growth will be there till March 2019, because everyone will be doing a pre-buying. Because after that, the technology really changes and the cost of maintaining a truck really changes after that. So we are positive on that, and they have a lot of idle capacity. So that leads to a market share gain due to the Ashok Leyland capacity being constrained now on. The second part which we think is the JLR numbers have been really down on last couple of quarters, and this might continue for a couple of quarters, but the eventual trade war, what they are talking about between US and China, if it hits the cars, I think Tata Motors will be the beneficiary because they are able to supply it through Europe itself. So they managed to get that freeway in this whole system. And the third point which I see in the valuations, if you're buying, they're even showing a 20 to 25% growth in the passenger vehicles. So I think even that is coming at a cheaper cost today. So we are positive till it goes 370, 380.
Interesting. And the valuations would also be in the favor of somebody who's looking at Tata Motors right now, if indeed the growth does come back. What else? I think BACS would be the focal point today as well. The Nifty Bank could be a fairly interesting trade this morning. Let's wait and watch if it has the impact. Remember, global cues, or at least the US cues, were not in our favor, but Asia's shrugging off the blues from the US markets and the trade war fears and starting off on a good note. And the SGX Nifty 2, which was down about 0.35% at a point of time, is now about 0.2% down. And if banks perform, which is very likely that they could today, and we could have an interesting trend for the SGX, for the Nifty as well in the session today. In fact, let's get in our technical experts on board to try and figure out what to do in a scenario like this. Rahul Randeria from IFCI Financial Services on the show with us, as well as Ruchit Jain, technical analyst at Angel Broking, joining us on the show. Gentlemen, both of you, good morning. Many thanks for joining in. Now, let's start off with you. Would you take a trade on the Nifty or the Nifty Bank today? Fundamentally, the Nifty Bank has a trigger to move higher.
Good morning, Neeraj. If we look at the weekly charts of Nifty, last 3 weeks of the downfall has been recovered in a very short span of time on the weekly charts. If we look at on the daily chart, it has broken out from the falling wedge, which we have been discussing in the last couple of days, and it has been a faster retracement. So definitely the undertone is bullish in Nifty. Now, if we look at the pattern on the hourly charts, it is making higher tops, higher bottoms, and definitely yes, the weekly chart has been showing very strong on the candle, strong bullish candle. So definitely any maybe 0.5% correction today on the Nifty should be used to enter at the lower levels. Intraday would be difficult, but definitely looking at the global highly volatile markets, intraday would be difficult to trade. But definitely if anybody wants to trade for short to medium term and want to have a positional view, one should buy with a stop loss below 10,200. These are the spots levels. Short to medium term, I feel that Nifty can test the levels of 10,478 on the higher side, but it could be a slow and gradual move. Initially, I feel that Nifty can test the levels of maybe 10,383 on the upside, and then once it's sustained above that, 10,478. If we talk about Bank Nifty, again, the weekly candles are looking good. It has also given a breakout from a downward falling wedge. Faster retracement, charts are showing strength. If you look at the Bank Nifty component, private sector bank as well as PSU banks, many of the stocks are into deep post-hold territory. So we could see some sort of technical pullback in the individual stocks. This could take Bank Nifty on the higher side. So positionally, if anybody wants to trade on Bank Nifty, can buy at 0.5% correction if there is some sort of cool off today, with a stop loss below 24,200 on the downside, and upside I feel that Bank Nifty can test the levels of 25,400, which is a gap area of island reversal which was happened a couple of months back. So definitely both the indices are looking bullish.
Okay. Ruchit, what about you? What would you do today? Trade the Nifty, trade the Bank Nifty, and what? I mean, if you had to choose one between the two, what are the levels that you're watching out for?
Very good morning, Neeraj. Yes, probably we have seen during last week, except on Wednesday's trading session, the market breadth for the entire week was much positive. And usually, whenever such market breadth is positive, that leads to a positive momentum in the broader market or on the indices as well. Even today's trading session, as you earlier said, that in spite of the US markets closing in deeply in the red, the Asian markets are not reacting to it. Similarly, I don't think that even our markets would react much negatively. On the lower side, 10,280 would be the crucial support for intraday in as far as Nifty is concerned. So in case we get any kind of dip near the 10,280, 10,290 levels in Nifty, I would prefer going long at those levels, keeping stop loss below 10,240, and we are expecting levels around 10,400 to 450 range, probably in this week itself. Now, as far as banking pack is concerned, the Nifty Bank Index has a lot of hurdles on the high side, because when the markets were correcting, this was one of the underperforming sector. So I believe that whenever such pullback moves would be there, the index won't be able to give any significant higher returns in Nifty Bank Index. There would be more of a stock specific momentum. Usually, whenever we get a pullback move in stocks where the fall was very sharp, usually in such space the pullback moves are very sharp. And within the banking space, if you see that it was the PSU banking sector which had seen a very sharp fall in last 2.5 months. So I believe that if one has to play the banking stocks on a positive side, then one should take a risk over here and go long on the PSU banking basket from a short-term perspective, because there are a lot of short positions created since last 2 months. They are getting rolled over. So there is a high probability that in case any kind of this pullback moves would be there, the PSU banks would outperform the broader indices. So within the index space, I would prefer going long on Nifty rather than Bank Nifty on any kind of minor dips around 10,280, 290. And within the banking space, I would prefer going long on some of the PSU names such as Canara Bank, State Bank of India, Bank of Baroda.
Okay, so use the dips to buy Nifty is what Ruchit is suggesting, but let's also get you some stock-specific trading ideas for the radar. I'm going to come to you first. Individual stocks on your radar?
Yeah, I have two buy call. Both are position call. First is a buy in Heidelberg Cement. The stock has given a strong candle formation supported with volume. So definitely we could see a pullback rally from the current levels. Traders can buy on dips to 150, upside positional target 165 with a stop loss of 143. Second buy call is in Federal Bank. Last couple of weeks the stock have been consolidating in oversold territory, and yesterday on Friday stock has given some sort of breakout, or it is on a verge of a breakout. So definitely any pullback or intraday cool off should be used as a buying opportunity. So traders can buy Federal Bank on dips to 94, positional target 105 with a stop loss of 91.
Federal Bank and Heidelberg Cement, both are the buy calls coming in from Rahul. Ruchit, what about you? What trading strategies do you have on individual stocks?
I have a couple of buy recommendations. Both are based on simple logic that these stocks have been outperforming in the corrective market. So stocks which have shown outperformance during correction, when markets are moving higher or we are seeing a pullback move, I think no such names usually tend to outperform the broader indices as well. NCC is one stock in which we had not seen any significant price correction in this corrective move in the markets. Rather than during last week, the stock has also given a breakout from its falling trendline resistance. So I would prefer going long on NCC with stop loss below 126 for target around 135. And my second pick would be a buy call in Century Ply. Even this has shown a consolidation phase for about 2.5 months, and during last week prices have given a breakout from the consolidation phase with very good volumes. So one can go long on Century Ply, giving stop loss below 342 for target around 376.
Interesting. So those are some names to watch out for. We'll talk about some of these names a bit later on as well. But it's 8:50, that time of the show, wherein we get you a Bloomberg Edge, our in-house proprietary tool, wherein Jayesh Kilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, what's the stock on the radar today?
Morning, Neeraj. So I'm watching out for Shriram Transport Finance. That is because on the weekly basis, the trender indicator has given a buy signal. And as of Friday's close, you can see that the stock was up nearly 3%. And in fact, it did manage to see delivery buying of more than 160 crores. So, looks positive for Shriram Transport Finance. But let's have a look at how the trender actually works. It's a proprietary Bloomberg indicator which uses the average true range concept as one of the key inputs for calculation. Not only it generates buy and sell signals, but also helps you to manage the stop loss. It becomes very easy to decode the indicator. You have to simply follow the colors that you get. You buy when it flips from red to green, and you sell when it flips from green to red. With that, let's have a look at the chart of Shriram Transport Finance. Now, mind you that this is a weekly chart, 1 year weekly chart for Shriram Transport Finance. And you can see that this last bar, this has actually closed above the red line, which was the previous resistance line for this stock. So, now the close is above, and you can see that historically it has performed well whenever, such kind of scenario has happened. So, somewhere in October, you saw this big bar, and post this also, you saw that November to Jan, the stock actually moved from about 1200 to in excess of 1500 levels.
Wow. Okay. So that's one past instance. I mean, does it have a long dated past history, Jayesh?
Yes, Neeraj. So last 1 year, the net profit would have been about 21% if you had bought all the indications that were given by the trender.
Not bad. Shriram Transport Finance and NBFCs by and large could have a good day today as well. Thanks a lot for that, Jayesh. Sameer, come in on that. NBFCs, the bond yields have come off dramatically. We've had a bit of a reaction, but Friday's move might result in some bit of more easing of the yields over a period of the next 1 to 2 weeks. Is that a natural, constructive move for NBFCs?
So I'm again negative on NBFCs. I'll give you one reason. For us, the rate cut cycle is almost over or over. If you see the banks, the base rates are already increasing by 10 bips to 25 bips. So over there internally, structurally, you're in a rate hike. Whether RBI does it today or a year later, that somehow doesn't speed up the rate hikes which are happening at the bank's level. Now,
yeah, but if it happens post a year, you have a year to ride the NBFCs.
So over there, what's happening is a lot of NBFCs have shifted their system to either a home loan base or the base into, you know, the MSME sides. So over there, the NPA pressures are huge. Over there, what is helping them is the NPA provisioning, which is still helping them out. On even coming down from 120 to 90, they are still sufficient to have a buffer to reduce the provisioning over there. So in that, the only plus point is whoever is conservative. Like a SDFC is conservative in provisioning of their whole matter. And Bajaj Finance is again conservative in provisioning of the whole futuristic NPA, which might turn into a gross NPA tomorrow. Over now, the only thing is that plus if the banks have increased their base rates and the NBFC funds come from mainly banks, so they've also increased. And the competition in all the spaces which these NBFCs are spaced in are so highly aggressive now that the rates have to be let go at a smaller margin. So I don't see margins expanding here on. I might see a case where the margin contracts. And over there, even if a slight NPA rises, it'll hurt the books really bad and the valuations really bad. Because if you see, everyone's trading at a 3 to 4 times price to book, minimum. So over there, any small expectation miss will drastically...
What about Jeevan or Equitas? They aren't expensive. Are you buying them?
So Equitas, I'm not buying. I bought some part of AU Small Finance in the fall, in the corrective past 3 months. And over there, the only progress which we see on the ground, so we do a lot of ground research.
Sure.
And AU has been very aggressive in expanding into Rajasthan, Madhya Pradesh. And Equitas is the base of being over there in Rajasthan. They're not able to show that kind of aggression which AU, being an outsider to that state, is showing in the system. So, because if you see Rajasthan, UP, Bihar, Madhya Pradesh, these are the biggest consumer markets for these microfinance companies who have turned into banks.
Okay.
And they're showing a lot of deposit growth over there.
You know, the other stock which was interesting on Friday, it went over, was Pyramid Enterprises. After that news came in that the company will be commencing its business of asset management and also merchant banking. So there was almost a 4 to 5% move that one has seen. Even in the last 1 month when the markets have been quite volatile, the stocks managed to give returns of nearly 12 to 13%. Rahul, on the charts at the current levels, would you suggest somebody to go long here?
Yeah, Pyramid Enterprise has been under pressure from a very long period of time. From 3,000, it has been moving down, making low tops, low bottoms. The last couple of weeks, we have seen some sort of support in the stock. But in the last couple of days, we have seen a sharp rally. This rally could be extended where there was a multiple resistance area around 2,762. So definitely this momentum could inch back to those levels and see some sort of profit booking. Those who have bought at the lower levels could try to book profit at the higher levels of 2760, because that is the equilibrium point where 100-day and 200-day moving average both are coming together. So definitely some sort of profit booking could be seen. But those who want to enter, one should wait for some sort of pullback. Then only one should enter. But already the stock has rallied. So some sort of more upside is there. But one should use to book profit at the higher levels around 2750 to 2760 odd levels.
Samir, did you buy this one on correction?
So we've been buying this for past 3 years now.
Okay.
So this is like one of the stocks which we are biased on. I'm agreeing it on television because see, if you see the way they have grown the book, see earlier they were into pharma sector domestically. They took it out and the book was almost nothing on the revenue side. They planned to build up on the financial side and they've built up really nice. What triggers I see is a lot of residential funding is being done through them on a good projects. Okay. So through this stock, I get the exposure to those projects as well. And the secondly, they're planning to re-enter into the domestic pharma business. So because they had a non-compete with Abbott, whom they sold to the domestic pharma. So now 2019, that's getting cleared and that tenure gets cleared. So they'll re-enter. So I have a good finance company and now hopefully a good domestic pharma story also kicking in, which I think benefits a lot of holders from here on.
Okay.
So, yeah.
Ruchit, a quick thought here. I mean, we've discussed Piramal at length. Just very quickly, 20 seconds, 2 or 3 other stocks which gained quite strongly in Friday's session. Sobha, Trent, or for that matter even a Pidilite?
I think all the three are in a positive trend if you see, and if you ask me to rank all the three, then definitely Trent would be the first one because of the outperformance that it has showed. And if fresh trades even at current levels should be taken as per the reciprocal retracement, we are expecting targets around 420, 425 in short term itself. So at current levels, amongst the three, if I have to choose, then based on outperformance, one should look to buy Trent Limited.
Okay, so we'll watch out for Trent, whether there can be any follow-on buying or not. Samir, any views on Trent here?
No, we don't cover it because we feel that real estate space is like...
Okay, we'll address the pre-opening rates. The Asian markets which have turned green right now. SGX Nifty is currently showing a downtick of only 8 points. So there's been a huge recovery that one has seen across the Asian bourses this morning because the cues from the US were negative. So Nifty is showing an uptick of nearly 40 to 45 points. Sensex is showing an uptick of about over 100 points. Remember, these rates are going to settle down, so wait until 9:08. But let's look at some individual stocks in today's session. Just pull up a couple of Nifty constituents. I guess Lupin was quite active on Friday. Let's see if there is any sort of follow-on buying which can continue on this one or not. Lupin is showing a downtick of nearly 6 rupees in the morning trade. ICICI Bank, pull up that one. It's a heavy weight with weightage of nearly 4.5%. So this is going to be crucial. ICICI Bank is showing a downtick of nearly 1%. The other stocks which are quoting in the red right now are Tata Steel, Hindalco. You've also got stocks heavyweights like ITC and State Bank of India which are quoting in the red. Pull up HDFC Bank. Remember, these rates will settle down, but just in the pre-opening session right now, HDFC Bank is showing an uptick of nearly 8%. And any gains for HDFC Bank will augur well because it's got almost 9 to 10% weightage in Nifty. The other ones, oil marketing companies, they were quite active on Friday's sessions. You've got BPCL, HPCL, which are showing some bit of positive ticks. I want to pull up Jet Airways. Remember, that's the stock which has gone into the F&O ban, the first stock to enter for the April series. Let's see how that opening is panning out. Okay, no trade has taken place there. But Titan and Jubilant Foodworks, the stock which we discussed at length with Samir today, will be in focus. Titan is trading around all-time high levels, and as Jubilant too, both the stocks actually have been trading with a good amount of gains. Jubilant Foodworks showing an uptick of nearly 10 rupees, Neeraj.
I mean, I think Titan for now would remain the focal stock of the day. Let's see what happens during the course of the session. Bring up the bond yields and bring up the rupee as well. But the bond yields in particular, and let's see if there's a bit of a correction in the yields now as well. Now this is the USD INR, okay, 64.86, so some bit of a pullback there. The yield should come up on your screen as well. Let's see a bit of a fall in the yield, 7.15. Actually, no, not too much. Let's wait and watch during the course of the session. The expectation would be that during the course of the next 15 to 20 days, at least, like Rajpal of Nomura believed that we could be in the range of 7 to 7.10. So let's wait and watch if indeed that comes in. But I think his prediction about the reaction to these moves by the Reserve Bank being muted might well turn out to be true. Let's wait and watch what happens. No immediate reaction though on the bond yields, I must say. Therefore, maybe we will not see too much of a reaction on NBFCs as well. Last but not the least, just before we get into the top brokerage calls, want to mark what Sobha is up to, what Trent and Piramal are up to. These were amongst the top 3 performers in Friday. Sobha, after that 8% gallop, is about 0.5% higher. Trent and Piramal Enterprises, large names, so not necessarily very volatile, but no, not starting off on a big note. Maybe, just maybe, stocks like KDDL and GVK Power could be the ones which could be reacting more actively. We'll get to know about them during the course of the session. But 9:02, let's get in. Okay, GVK Power, I don't know if it's another 9% or no, but that's a big move. It had about a 9% move in Friday's session. Let's see if there's more in store. Let's get in Sumit Sircar, who joins in with the top brokerage calls of the morning. Sumit, good morning.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is Deutsche Bank market research on Kotak Mahindra Bank. Now the brokerage has raised the rating to buy from hold and have hiked the target price to 1,280 from 1,100. Now, according to the brokerage, growth momentum for Kotak Mahindra Bank is improving as its liability strategy is paying off. Now, the bank is now moving to a high loan growth phase where the loan growth is expected to be more than 20% for the bank. Now, the bank is best placed to benefit from financialization of savings with growing customer base and diversified product portfolio portfolio. The brokerage is expecting the bank's return on asset and return on equity to improve to 2.4% and 17% by financial year 2020. It also says that the subsidiaries of the bank like the mutual fund, insurance and broking are at a critical stage, and going forward the profitability is expected to improve for these subsidiaries. Lastly, it says that the expensive valuations for the bank are justified as the bank is now entering a growth phase. Second, we have is Macquarie on Jubilant Life. Now the brokerage has maintained its outperform rating on the stock with the target price of 1096, which suggests a potential upside of 34%. Now according to the brokerage, as the surge in the LSI space or the life science ingredient space is decreasing, the specialty business will now be in focus for the company. Now the brokerage is expecting Jubilant's pricing in the LSI segment to gradually taper down in the fourth quarter of financial year 2018 and in the first quarter of financial year 2019. However, it is expecting the fourth quarter of financial year 2018 to be solid for the company, led by pickup in the specialty business. Lastly, it says that the valuations look attractive for Jubilant Life, which is also the top mid-cap pharma pick.
All right, Samit, thanks a lot for bringing those big brokerage calls for the day. And Kotak Mahindra Bank, Samir, would that be your bet in the private banking space?
So we are betting on HDFC because of the consistency and the provisioning and the anticipation of the provisioning to kick in. And on IndianOpen, that's because of the Bharat Financial merger with this bank, which gives them a big exposure and big volume growth in terms of the retail outlet reach. So I'm quite optimistic on these two banks. Kotak, I think, has that dilution part still hanging over it. So I think there'll be a certain kind of another announcement to dilute that percentage of promoter holding, because that kicks in and that creates some kind of a drastic measure which might cost to the bank or even give it a pause for a 1 year or a 2 year.
Okay. So watch out. Samit Kalra clearly likes HDFC Bank and IndianOpen Bank over a Kotak Mahindra Bank. You can pick and choose. Please consult your financial advisor before you do indeed get down to buying one of the banks. However, do consult your financial advisor when you invest into IPOs as well. Correction, the secondary market definitely spoiled the sentiment in select primary market names as well. Amongst retail investors in particular, Raymond Hotels, which is all set to list today, did probably bear the brunt as well. QIB's managed to make sure that the issue scrapes through. The 1,040 crore issue was subscribed about 1.2 times. But almost negligible interest shown by retail investors. Saloni Dhanuka, however, is standing by with what would the listing of Lemon Tree look like and the valuations thereof. Saloni, good morning.
Good morning, Neeraj. So, Lemon Tree Hotel's initial public offer has been sailed through on the final day of subscription. Now, all thanks to the institutional investors which subscribed to this IPO in the tune of 3.9 times. While if you look at retail and HNI investors, they got poor response from this segment and it was subscribed a little over 10% each. On the overall basis, the IPO could manage to garner nearly 1.2 times of subscription. Now, if you look at possible listing scenarios, dealers are predicting that the IPO is likely to list at discount. However, if it manages to list exactly at the issue price of 56 rupees, the market cap would be around 4,400 crore. And if it were to list at a 10% discount, say at 50 rupees, the market cap would be around 3,900 crore. And if it manages to list at a 10% premium, say at 62 rupees, the market cap would be around 4,870 crores. Now, given the market cap scenario, the enterprise value and the EBITDA, that is their operational profits ratio, will vary in the range of 40 to 49 times, which is still expensive as compared to its peers. Now, in terms of business, Lemon Tree Hotel is India's largest hotel chain in the mid-price segment, and also the company directly owns some hotels and they operate some hotels on the lease agreements as well. Now, in terms of operations, as of Jan 2018, Lemon Tree Hotels had 4,697 rooms in 45 hotels across 28 cities in the country. And in terms of brands, Lemon Tree operates under 3 brands, namely upper mid-scale segment called Lemon Tree Premier, their mid-scale category called as Lemon Tree Hotels, and economy segment called as Red Fox. Now, as you can see here, majority of their rooms consist of their Lemon Tree Hotel, that is the mid-scale segment. Now, in terms of revenue composition, majority of their revenue comes from their owned hotels. As you can see here, almost 63% of the top line is contributed by the owned hotel segment. Now, remember, higher share of owned hotels also means that higher capital expenditure by the company. Now, in terms of net profit, that is the bottom line, as you can see here, the company has managed to turn around in the first 9 months of financial year 2018 after seeing several losses since FY13 till FY17. Neeraj.
So, how do the valuations stack up against its peers?
So, Lemon Tree's closest competitor is Royal Orchid. This is, of course, in terms of their business profile. We also have Indian Hotels and EIH in this space. However, their majority of their revenue comes from their premium luxury segment. But for Lemon Tree, it's the mid-scale hotel segment. So, we have compared it to Royal Orchid. Now, in terms of occupancy rate, Lemon Tree has the highest occupancy levels of 76% as of FY17 as compared to the industry average of 65%. Now, they not only have the highest occupancy rate, but they have also maintained their leadership position in this field since FY15 till FY17. Now, on the flip side, if you see their food and beverages revenue, it is the lowest as compared to peers, which is 21% as compared to the industry average of nearly 30 to 45%. And lastly, in terms of valuations, Lemon Tree is trading at a premium as compared to its peers in terms of enterprise value to EBITDA. It trades around 45 times its operational profit for FY17, which is very, very expensive as compared to the peers, which is in the range of 15 to 30 times. Also, brokerages have earlier mentioned and have recommended their clients to avoid this issue, citing higher valuations, higher competition in the mid-size segment, also highly capital-intensive business model for Lemon Tree Hotels.
Great. Saloni, many thanks for putting that into perspective. I don't know, the hotel space just seems to be completely out of favor. Somehow we don't see too many companies coming out and garnering enough interest. But for a brief trade-related rally that we had seen in Kamath Hotels, for example, there's such a beaten-down stock that after a few good months, that stock moved up quite a bit. If you pull out the last 1 year, Kamath Hotels had a fairly interesting move. Not today's session or not the last 1 month's move, but the 1 year move will show you that it actually came up quite reasonably from the lows of the time that it had clocked in. But somehow the hotel space just doesn't seem to be in favor at all. Anyways, 4 minutes left for trade to kickstart. As we look at the pre-open rates, Cipla seems to be looking like starting off on a good note, as is Titan. And amongst the mid-cap end of the stocks, we probably have some traction coming in. For Inox Wind, they have won an order. Kesoram, GVK and Apollo Hospitals amongst other names. Ruchit, quick thought on Titan, 1% higher. Is there a trade here?
I think the outperformance should continue the way we have seen that the stock has, when the markets have shown a pullback move, the stock is now trading around its all-time high. So there is no doubt in terms of the outperformance that the stock has shown. Even the structure looks quite positive that whenever there are corrective moves, those corrections has been used as traders and investors to create long positions rather than using any kind of rallies as selling opportunities. Now, since the stock is trading at its all-time high, we usually take out reciprocal retracements of the previous corrections to come out with the target projections. And 161.8% reciprocal retracement of the previous correction is indicating a probable target of 1054, 1055. So, risk-reward ratio is quite favorable at current levels. One should go long at current levels, keeping stop loss below 915 for target around 1055.
Okay, that's a call on Titan, and we're just minutes away from the opening, and we tell you all that you need to know ahead in trade today. ICICI Bank may mull road ahead for CEO Chanda Kochhar, board likely to meet this week as per an Economic Times report.
Titan says FY17-18 was a very satisfactory year in terms of overall business performance, achieves excellent retail growth in all businesses.
Promoters sell 3.2% stake in ARA Engineering, with DSP BlackRock being one of the buyers. In other block deals, you had Reliance Mutual Fund as well as IDBI Mutual Fund buying into Magma FinCorp.
Tata Motors, Kaya, Siemens as well as Radico Khaitan will be meeting investors and fund houses today.
Deutsche Bank upgrades Kotak Mahindra Bank, raises the price target to 1,280 rupees per share from 1,100 rupees per share, while Macquarie maintains outperform on Jubilant Life Sciences with a 34% upside.
And Lemon Tree Hotels to list on exchanges today with an issue price of 56 rupees per share. Issue was subscribed about 1.2 times. So you expect a subdued listing out there, but all focus on what stocks to watch out for today, Navneet.
That's right, Neeraj. We'll take top call from Rahul as well before the trade starts. Rahul, looking at the pre-opening rates, are you maintaining the calls that you gave us, or is there any new stock?
Yeah, I have whatever I have called, I maintain on that because those are the positional calls. Another call which I am liking is Mindtree. Last 4 days of consolidation, Friday we have seen a breakout, so maybe any cool of maybe 0.5% one should buy with a stop loss below 805. Positional target would be 860 on the upside.
Okay, so that's the top call coming in from Rahul on Mindtree. Well, just seconds to go for the market opening, Neeraj.
Yeah, Ruchit, what about your top call for the day?
I would go with some momentum in the PSU banks. I think today for intraday session, PSU banks could show positive move. Go along on Canara Bank from an intraday perspective, keeping stop loss below 277 for intraday target of 296 to 298.
Okay, so Canara Bank, Ruchit's top call. Mindtree is Rahul Randeria's top call. Gentlemen, thanks so much for taking the time out and being with us today. Really appreciate your time. Samir, stay on. We'll just take a final thought from you post-market open. But this is how the markets are likely to start off today. We'll have about a flattish start to maybe marginally in the red. Yes, that's what the Nifty Bank is doing, marginally in the red. The Sensex and the Nifty, well, actually a flattish start. I don't think the mid caps and the small caps would have done too different. So probably a flattish start as well. Yeah, 0.25%. So no big moves really for any of the key indices in the session today. Let's pull up the heat map and see what's happening. ICICI Bank continues to be in the limbo, really, about 1.5% higher. It's probably a stock that we'll ask our guests almost every single day. Just so much of interest in this one. Bharti has some woes to itself, 1.5%. I think COI came out saying that the stress quarters for all the companies as well might continue for the next 2 or 3. I don't know if that's the reason or something else, but Bharti Airtel is down about 1.5%. In fact, now the top loser. Amongst the gainers, Titan, HP, BP, crude has nosedived on Friday and over the weekend, and therefore the oil marketing companies have a trading flavor to themselves. Titan has some good traction, about 1.5%. Otherwise, the market seems to be flattish. Arguably, the large cap stock of the day has to be Titan Industries, about 1.5% higher. What about some of the other names? Quickly get in 2 or 3 sets of stocks that could be in focus based on news or based on Friday's moves. Of course, Titan remains the key stock to monitor, and 1.67% now, the strong Q4 commentary aiding that sentiment in the stock today. Let's see for how much further does it rally, now building on some strength. New highs in Friday's trade, Pidilite, KDDL, Jubilant FoodWorks, and boy, the rally in Jubilant continues. So that's up about 1.5%, but Kamla Dials too, after a series of circuits, today is still up 2.5%, but not locked up on an upper circuit. Let's see if it does. And then stocks which had some very strong traction in Friday, Sobha, Trent, and Piramal. Well, starting on a flat note, all of those. Sobha maybe 1% higher, Piramal slightly soft, but let's see what the day has in store. Navneet, what are you spotting?
Well, Neeraj, markets have picked up momentum. Nifty is now at least in the green, and let's just pull up the mid-cap indices. Mild bit of outperformance have been seen for the Nifty mid-cap index. Let's pull up that. It's up 0.3% as we speak, and also the India Volatility Index. Remember, last week we did see some bit of correction for the volatility as well, which is a positive sign. But this morning, India VIX is quoting gains of around 1.5%. Pull up Jet Airways. That's the stock which has entered into the ban. Let's see how that's reacting to that. Jet Airways is showing an uptick of nearly 0.6%. Stocks like AIA Engineering will be in focus after Friday's bulk deal, where the promoters sold nearly 3.5% stake. That's showing a downtick of nearly 3%. SmartLink on Saturday, the board did approve the buyback at about 120 rupees, and that stock has seen an uptick of nearly 3.5% in today's session. But otherwise, you've got a whole host of mid-cap stocks. Inox Wind, which is 100 megawatt order. That's pull up that stock. Inox Wind is also showing an uptick of nearly 2%. Pull up Max India. According to Economic Times report, Analjit Singh is in talks to buy Life Healthcare Group's 47.5% stake in Max Healthcare, and that's opening with gains of nearly 4%. And also stocks like Sri Renuka, which according to news reports also suggest that that's looking to divest its Brazilian operations, but I guess that was largely priced in.
Okay, and some news flow on ICICI Bank. I think the story is out on the terminal. We just learned. But Samir, any which is first a view from you on ICICI Bank. What does an average investor do today? Somebody who is, I know of a lot of people who are saying that, oh, the stock has fallen so much, let's go out and buy it. Sure, it's not as simple as that, but if anything, valuations are in your favor.
Yes, it is. But see, again, the part of uncertainty of how it unfolds. because these days if you see any small aberration in any kind of scam or any kind of news flow creates a lot of downside to the stock. And it's more about the trust now between the CEO and the company being run. Now, even if a new person comes in, now how much cleaning that new CEO has to do, that creates a more issue. That's why even if you see PSU banks, that's the main issue. Because 3 years on the rolling or 2 years on the rolling, every second year or the new person who has to clean the book takes time to clean the book first and then grow the bank. So if the same thing happens out here and the drag of cleaning the book is even longer or more heavier, there'll be more downside to it. Right. So we really don't subscribe to buying into ICICI Bank or Axis even for now.
Right. Neeraj, the news reports indicated that this week the board is likely to meet to decide over Chanda Koch's future, and the Bloomberg story that you were alluding to, that says the ICICI Bank's board is set to be divided over CEO Chanda Koch's future now. So that's not a positive news which is coming. And according to this news report, they say at least some outside directors are opposed to Kocher continuing in her current role. So probably that's the reason why we've seen correction in the opening session itself coming in for ICICI Bank.
Yeah, I know. I know Shibani Sircar Kurian is with us, but I doubt I can ask her about individual stocks. So I'll just request Samir to talk about one more thing. Yeah. So this and what happens here now. There are, and we'll try and get in George Smith Alexander or Anto Anthony, one of the two people who filed in the story from Bloomberg News, on the phone line as well in just moments from now if we can. But this is a story that is there on the Bloomberg terminal and will be soon there on the Bloomberg Queen website as well. Both the spots open for you to go out and read this story. But the essence of the story is that some outside directors, as Navneet said, are opposed to Kocher continuing in her role. This is according to people who've asked not to be identified as the information is not public. Source-based information, but there is an outside chance that board members may ask Chanda Kocher to step down as well, because there are some directors who are not in favor of this continuing to happen. If this happens, we have, at such a large bank, it is sort of unprecedented. If this were to happen, a stock impact, do you see, or no, not really?
I see some kind of stock impact, because the only point is then the whole realignment of the bank kicks in, which reduces the market share, which reduces, I think, for few quarters at least, because it's not easy to replace a CEO at such a large bank. It takes a while, who'll handle in between, and will it be progressional? So it shows a lot of questions out there, and especially when the board is divided. So that means if that story is true, then even whether to replace or not replace, now onwards the board will always have this division in them. So I think this will affect the bank, and I don't see any relief coming in from a 1 quarter or a 2 quarter, even if this gets sorted out. Because even if she stays on now onwards, I think any kind of a board division, or even the thoughts of a board being divided, which wasn't there last week, now the whole impact of this will change the system.
Actually, in a week's time, Neeraj, the board stance looks like could change, and that's what the story is suggesting. Because I think when they addressed the media just 8-10 days prior, they said that we're fully reposing faith in Chanda Kocher, and they were standing by her. But so far, I think she's not addressed the media. She's not spoken much on the Videocon issue so far.
I doubt that's both happen as well. But this is interesting, and these are interesting developments. At some point of time in the day, we'll of course get in George Smith Alexander or Anto Anthony to give us a sense of what else that they learned. Though I think the story is there on the website as well. You can go out and see that. Samir, thanks so much for taking the time and joining us today. Really appreciate your time.
Yeah, thank you.
Okay. Shibani Sircar Kurian, she's Senior Vice President and Head of Equity Research at Kotak Mahindra Asset Management, joins us right now on the show. Shibani, thanks so much for waiting by patiently, but stock-specific news for which we couldn't ask you, and therefore had to address this news with another guest. But just on this broad point of this spate of issues surrounding banks, hitherto it was only public sector banks. Now we have a couple of private sector banks in the fray as well. Does it make you nervous about investing in banks, or are you guys sanguine about the whole situation?
Yeah, hi, good morning, and thank you for having me on the show.
Pleasure.
So when we're looking at banks, where we are structurally positive are on the retail private sector banks, where clearly two things. One, of course, the loan and the deposit market share seems to be increasing. Both in terms of loans and deposits, these banks will continue to grow at a faster pace than the market. For retail private sector banks, asset quality issues are significantly lower, which means that in terms of the reported profitability of ROEs and ROAs, they would continue to show a healthy trend. So that's where we are structurally positive. For PSU banks, we've been cautious now for a fairly long period of time. Despite the fact that there was a capital infusion which was very large and that was announced last year. But if you look at the balance sheet stress that is continuing on PSU banks, notwithstanding the other issues on frauds, etc., but the very fact that they still have to provide for a very large portion of non-performing loans means that the capital that they got last year will be utilized largely for that, and there would be very little growth capital left. And frequent changes in terms of top management, etc., continues to remain an issue. And structural and administrative reforms are still to come through for PSU banks. So that's a segment where we've been cautious. For the corporate private banks, again, especially post the February 12th circular of RBI, where all forbearance on restructuring has been removed, in the near term, you will continue to see pressure because provisioning costs will be significantly higher. A lot of loans which were in the stressed pool will now have to be recognized as NPLs, and therefore there would be higher credit costs, and that could continue for a period of time. And we also have to see how the outcome of the cases that have been referred to NCLT pans out and what kind of haircuts banks have to take. So notwithstanding what's happening on terms of frauds or management related issues, even from a fundamental perspective for corporate and PSU banks in the near term, there could be significant pressure on profitability, at least for FY19.
Hi Shibani, good morning. What's the view on the earnings? Because we kickstart the earnings season this week. We'll have Edison Bank as well as Infi coming out with the numbers. What are you factoring in with regard to the fourth quarter earnings of FY18?
So hopefully the fourth quarter will take up where the third quarter left off in terms of earnings, and we would see better trends in earnings. There are few segments and sectors where earnings growth we expect would be strong, especially on the consumer side and the auto space and retail private banks and certain retail NBFCs as well. So for instance, in the automobile space, for the MHCV segment, the numbers have been extremely strong. Two-wheelers have shown a pickup in terms of volume growth. The rural plays especially would possibly show improving trends in terms of earnings and growth. Similarly, for consumers as such, as an overall segment, we would see better trends on volumes as well as on margins because raw material costs have started to decline, and that would aid overall earnings and profitability. NBFCs and select spaces, especially those which have been able to withstand competitive pressure or operating in segments where there is less competition, will show higher loan growth. Also, those operating in the rural segment where we are seeing signs of improvement would possibly show better growth. And also because of the moderation on terms of yields, we've seen that the pressure in terms of cost of funds would also abate a bit for some of the select NBFCs where you will see better earnings. And retail private sector banks would also be a segment where, as I mentioned earlier, because of market share gains, both in terms of loans and deposits, as well as better asset quality trends, you will see better earnings profile. Where the segments which would see pressure would specifically be the corporate banks, the PSU banks, telecom as a space where we continue to see earnings pressure. I think the Q4 earnings overall will set the tone for how earnings will pan out for FY19 and what expectations the market will go in. At this point in time for FY19, we are looking at mid-teens kind of earnings growth, which is an improvement over last year. And we expect that the trend of improvement overall in terms of earnings would continue. On the ground, the feelers that you're getting, especially where domestic consumption and certain industrial or infrastructure related segments are concerned, the numbers seem to suggest that there is an improvement in terms of growth. But what is clearly bearing down overall, while we have a scenario where earnings is improving, is that there are macro pressures. One, we spoke about what's happening on the bank balance sheets and the need to provide, which could have a bearing in terms of the credit that they provide to the mid-corporate segment. And secondly, of course, from a macro side, we are seeing pressures on current account deficit, which one would have to be wary of, given the fact that a larger current account deficit would need funding from portfolio flows and foreign FDI flows as well.
Okay. Shibani, the other thing is what to do with, I mean, I know you addressed a bunch of sectors now, but I want to talk about a couple of specifics. What to do with the economy-facing companies? Hitherto, there is clarity on a bunch of other sectors because of management commentary otherwise. The one where we don't have clarity in addition to banks is economy-facing companies, wherein a clutch of names are saying that due to international order flows as well, capacity utilization is picking up, and that might show in earnings and therefore valuations will pick up. In a clutch of other names, that is not turning out to be the case. What are your conversations suggesting, and are you guys betting heavily on that pocket?
So as you rightly mentioned, it is fairly stock specific. You are seeing some segments where there is improvement in order flows. If you look at the overall infra space, the kind of growth is still driven largely by public capex and spend by government. But there are key areas where the focus is roads, railways and affordable housing. These are the three segments where you are seeing improvement in order flows, and therefore the names which have a bearing on these three sectors would see better trends in terms of orders. What we are also seeing, in terms of our overall portfolio positioning, is that cement as a space which is a proxy for infrastructure, where growth has been visible in terms of road construction as well as affordable housing, is showing better trends on terms of volume growth. Where the sector has been facing some degree of pressure is pricing. While we had earlier anticipated that prices would start to improve, but clearly because of competitive pressures in certain spaces, prices have not gone up as much as one would have earlier anticipated. We now expect that we would be in a scenario where prices would start improving, and also with better capacity utilization, you will see better profitability. Raw material pressures would possibly continue, but as price hikes happen, some of this would be offset, and that would flow through in terms of earnings. So cement is a sector where we continue to remain positive as a proxy play to the overall infra space.
Okay, that's a positive view on the cement space. Shibani, so far, if one were to look at the returns in the last 1 year or so, the theme has been metals and NBFCs, which have been giving good returns. Going into FY19, what according to you can be the theme of this market?
So I think our theme continues to be predominantly domestic oriented companies and consumption. What we are seeing within the consumption space are three key trends. First, the rural space, which so far was not showing very healthy trends, are now showing trends of improvement. So rural spend is clearly on an uptrend, and the rural segments and those sectors which have a linkage to rural India would show better growth. So that's one big theme that we are seeing on the consumption side. Secondly, we are seeing increasing premiumization and increasing penetration. So the consumption basket is a fairly large basket where we are positive on. So be it automobiles, be it consumer discretionary, FMCG, or even retail, private sector banks and certain retail NBFCs, the entire basket on the consumption side is where we are positive. As we mentioned earlier, on the infra space, it is stock specific in nature. Cement is a segment where we are positive on, and oil and gas as a space is also a segment where we see that things should remain fairly buoyant going forward.
Okay. On that note, Shibani, many thanks for taking the time out and joining us, and thanks for being patient with us while that news story from Bloomberg broke, but appreciate your time with us today.
Thank you so much.
Well, that's the view from Shibani Sircar, Kurian, on markets by and large. Tell you what, take a very quick break. Come back on the other side of the break, talk a little bit more about ICICI Bank. More importantly, Raymond as a stock is doing extremely well. Gautam Singhania talks about the company's second coming in an interview with Vinka Doshi. And we also find out IDBI Bank's strategy to bring down NPAs from the highest in the industry.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
I've been associated with many images in my life, a motor racing driver, socialite, a party boy, good time Charlie, whatever. I'm okay with it. I have no issue, I have nothing to hide from it. I'm in a phase of my life where I want to make a name and I want to create a company which is really a legacy that's going to be left back as a national asset.
All right, welcome back. You're watching Indian Open with us on Bloomberg Quint. Remember, Bloomberg News put out this very big story that was flashing on your screen a little while back and on your terminals as well, that not everyone on the ICICI Bank board is willing to back Chanda Kochar right now. George Alexander Smith, who put out that story, joins us now with more. This is big. A week ago, there was full backing of the board. Now you are learning that some members of the board might not be in favor of her staying on course.
Yeah, this is what we have understood, that some of the directors who are outside directors are not too happy with the situation. They want her to put in her papers, but yeah, I mean the situation is fluid. There is likely to be a board meeting as early as this week. I guess things could get discussed then again.
So, I mean, do we have the sense of how much of a division is there? I mean, is it one or two members? I couldn't read the entire story, or is it kind of split 50-50 of sorts?
I don't think it's split 50-50, but we haven't been able to approach a lot of the other directors. But yeah, I mean, there are a few people who are not too happy with the situation. They feel that the bank is getting pulled into stuff which shouldn't have been.
Yeah, this should be, in a manner of speaking, if this does indeed turn about and go the distance, this could be a very interesting development, something that we haven't seen in a large bank with a large position for a while now.
I think, yeah, best not to speculate on which direction this moves in.
True.
But, you know, important news coming in from George. Thanks so much. There's also been a change in the government director. Did you pick up anything on the reason behind that?
No, that's apparently, from whatever we have understood of it, that's a normal routine change. So there is no, I mean, there is nothing more than what meets the eye there.
Okay.
As far as the board and the other thing is concerned, yeah, I mean, I guess we will have to keep a watch out on what could happen in the future. I don't think we can say in either ways what would happen. It's a bit too early because obviously, I mean, if the regulators are not will not find anything, there would be a clean sheet, and there is, I mean, then Chanda can and will resume for whatever purpose. So, I mean, obviously, then she is out in the clear then.
Absolutely. George, thanks so much. Big breaking news coming in from George on Bloomberg News. Go to bloombergquint.com to read more on that as well. ICICI Bank trading about 1.5% lower this morning. Let's move on to another bank and get a sense of what's brewing at IDBI Bank. Lots of concern about how things will shape up for banks, especially some of the banks which have a large proportion of NPAs already, in light of what the Reserve Bank of India has done with their new February circular on stressed asset management. Let me welcome in for a an extended conversation here, Mr. KP Nair of IDBI Bank, who's joining us to give us a little bit more clarity. Very good morning to you, Mr. Nair. Thank you so much for taking the time. This is Ira from the Bombay studios. Mr. Nair, my first question to you is exactly that. We've already seen banks, report elevated NPAs. In your case, almost 25% of the loan book. And on top of that, now you have to deal with the new stressed asset circular, which came in February. Even if you can't give us numbers, qualitatively, sir, can you tell us how that is going to impact you?
Good morning, Ira. Yes, the numbers that you mentioned are correct, and that, yes, our GNPA stands at marginally below 25%, as you would have noticed at the close of the last quarter. Yes, it's true that the circular on February 12th will have an impact on that going forward. But then that's something which we have, obviously, as you said, we will not be able to mention any numbers, but there is going to be some impact of that that will be seen during the current quarter.
Ms. Nair, so can you just explain to us exactly what happens? Are all the assets which are in the S4A and SDR buckets going to get marked down into NPA, or is it the ones where the process had not been fully completed and banks hadn't signed off on the actual resolution under those schemes?
No, see, all of them need not necessarily get marked down as NPAs. So there is this particular circular very clearly states that the SDR and S4A and 5/25, while all of those schemes actually stand withdrawn, but some of these resolution plans, let's presume some of these would have already been completed. Some others which are under implementation, actually, they are also able to meet the parameters which have been laid down under the circular. So if those parameters are fulfilled, in that case, there is no reason that these will get downgraded or will get quantified as NPA. So that will not happen. But there are a few cases which are under implementation, but which will not actually be able to meet the guidelines which have been laid down under the circular of February 12th. So those actually will need to get downgraded, and then there is a period of 180 days during which the new RP will have to be formulated, or the existing RP continues.
So what is, as the disclosed numbers stand on December, what is the amount under SDR, S4A and 525? I think the numbers put out by my research colleague Shraddha Babla suggest that it could be almost close to 20,000 crore.
All of these, I mean, many of these numbers, actually, the numbers don't have too much of relevance, I would say, at this stage, because the ones which are, as I mentioned, the ones which have already been implemented, then those projects will continue. Those resolution plans do continue as they are. Of course, subject to the new guidelines, in the sense that the guidelines which have come relating to, upgradation of the asset or the default clause that will happen. So those will come into play insofar as these assets are also concerned. But what concerns is actually, as Ira, you mentioned earlier, is basically those cases which were under implementation, where, let us say, the standstill period had been invoked, and where that particular provision is no longer applicable.
Okay, understood that, sir. Sir, on the provision front, I think the RBI seems to have given a little bit of relief from what we understand on the NCLT cases, allowing provision up to 40% as compared to 50% earlier on the secured part, sir. Does that have potential to provide relief to you?
Yes, obviously that will provide a relief, and not only to us, it will provide a relief to almost most of the major lenders who have a large number of cases which have been referred to NCLT. So that particular provision, I mean, this circular provides a relief to us for the current quarter.
Okay. Did you have provisions in
sorry,
excess of 50%?
I shouldn't say the current quarter. Actually, we are in the Q1 of... pardon?
No, so I was just wondering whether you had provisions in excess of 50% on the NCLT cases until Q3, which would allow you to write back some of those provisions, sir?
No, we are not really looking at write back of the provisions. Yes, wherever we had a provision of either above 50% or yes, 50% or more than 40%, which is what is now warranted, yes, that relief will be available.
Okay. But sir, would it be fair, and this is, industry, but also you, would it be fair to say that Q4 will see higher NPA numbers and higher provision numbers, sir?
Q4 will see provision numbers. I won't really comment on numbers, as it's obvious that one can't comment on in numbers. But yes, Q4 will certainly see some provisions coming out of FT NPAs, as also the aging provisions.
And NPA numbers, sir, as percentage as well, would it be fair to assume that they are set to rise even from current levels?
I wouldn't really comment on that era. That's not really, would not be appropriate.
Okay, understood that, sir. So can you help me understand what has been the progress in recovery? I mean, in your case, sir, the problem is the large, corporate accounts, and we're all watching what's happening to the NCLT process. Can you share your thoughts on how you see that process going on, and any cases which are outside the NCLT, whether you are having much progress in actually, pushing up the recoveries and upgrades, sir?
So, see, as far as a lender like IDBI Bank is concerned, a good number of cases are in NCLT for us. See, as far as our overall loan book is concerned, a significant portion, as you're aware, is obviously to corporate accounts, which is roughly, we have something like today 70% of our overall loan book would still be, as far as the NPAs are concerned, would still be the corporate loan book. Of this, a very large percentage it has already been referred to NCLT, and part of it is again under reference to NCLT. So NCLT resolutions going forward will be a very, very large cornerstone insofar as the overall resolution of NPAs is concerned for IDBI Bank. As you asked, as you are also aware, in the last financial year, while a lot of progress has been made insofar as referring the cases to NCLT, and a lot of progress has been achieved under the ambit of NCLT, actual resolutions have happened to a few cases alone, and we expect a lot more resolutions to happen going forward in Q1 and Q2 of the current financial year. So we will going forward see a good number of resolutions out of our overall NPAs happening through the NCLT process in 18-19, as also in 19-20 to a larger, to a smaller extent as compared to the current financial year. As I said, since a good number of our accounts and a good percentage is already under NCLT, so while the other areas such as enforcement actions that we take, as also sale to ARCs and all of that, that continues to happen, and that will also account for the balance portion.
Sir, on the NCLT cases, I have two questions. I'll club them together. One is, I know we've seen a lot of interest in the steel assets, and, a lot has been said about that. But there are other assets, even in the first list of 12, where the interest has not been that high. Would you be able to give us a sense of what kind of, sort of haircuts you expect on steel versus non-steel assets? Even a rough range. I mean, is it, 50%? Is it 80% on the non-steel assets? And on the steel assets, is it much lower?
You've seen the numbers that have so far come by and large on the steel assets, because that's where some kind of sense of resolution is visible right now. And I would only say that on the steel assets, actually, the numbers look far more encouraging than on any other category. And perhaps the amount of haircut, I mean, so far the numbers that we have been seeing are somewhere in the range of between 50% to 60% resolutions. So obviously the haircuts will be lower in case of steel assets. But as far as the other assets are concerned, like you've seen, a lot of interest is there in a cement asset where haircut chances are zero. There is also some interest which is seen in other cases where there are good underlying assets. But in respect of the other cases, I think at this stage, all that we can say is that the haircuts are likely to be larger. But the exact numbers, I think it's too early to quantify.
Sure. So, a question on the timeline. I know you said that 2018-19 should see resolutions, and going by the stated timelines, it probably will. But there's a little bit of concern that this process is getting stretched out. There was some talk that the litigation time would be taken out of the 270-day period put in by the IBC, which could then make this a fairly lengthy process. What are you hearing from the lawyers, and what is your sense on the probability of this process getting stretched out beyond the 270-day period, sir?
We haven't really heard anything specific on this as yet. But yes, what you say is in a way true, that the process is actually getting a little constrained because of litigations. And we have seen some of that happening in larger cases, and it's still ongoing. So while as far as the lenders are concerned, it would still be helpful if you are able to contain the process within the overall deadline of 270 days. But at the other hand, if the legal litigations do go on for very long periods of time, if it becomes absolutely necessary that some amount of leeway be given, that would certainly help the lenders.
So let me just switch focus to another aspect, and that is, fairly active efforts at the bank to try and unlock capital. I think the last deal that went through was a BKC property, which I think Times of India reported was about 900 crore. Can you give us a sense of how much you have managed to unlock through these various non-core asset sales and, say property sales, etc., sir?
See, overall, actually, including the deal that you mentioned, we have been able to unlock close to about 4,000 crores or so.
That's a good number. And you still have, other assets.
Which is, of course, consisting of various deals.
And you still have other assets that you're sitting on now?
We have a few other assets. Yes, we do have not too many. We have a few other assets. I think you are also aware of a couple of other deals which are currently in the pipeline, where we expect to see some resolutions happening going forward in Q1 of the current year. So that effort continues, and I think we will probably see most of the assets that we have identified for divestment happening during 2018-19 certainly.
Okay. And so what is the strategy on the lending side now? I mean, by virtue of being under prompt corrective action, I know that there are restrictions on the, the segments you can lend to. Is there a restriction on the overall loan book growth? Should we expect the IDBI loan book to actually fall, sir?
See, the IDBI loan book, we are not actually saying that, we are containing our lending. What we are trying to do, and what we have, I think, successfully achieved in 17-18 also to a large extent, is basically to ensure that our risk-weighted assets are brought down to a level at which we are comfortable, and where we are sure that we can manage our capital requirements properly. So the efforts which have been ongoing ever since 2017-18 beginning, which will continue now also, is to ensure that our lending is to a better rated asset, and where the risk weighted or the risk weights are actually lower than the other asset classes. Obviously, with this strategy also implies that we would be concentrating more on increasing our exposure to the retail book, as also to the priority sector loans, as compared to corporate lending.
Okay, but you won't degrow the loan book, sir?
See, the loan book will, I would say, to an extent degrow on its own because of all these resolutions that are happening. As also, as I said, since the effort will be to grow only in better class of assets, so therefore there will be, to an extent, there will be a reduction. That is likely to happen, and that is actually in keeping with the overall strategy of the bank with regard to capital augmentation.
Okay. So last question to you. There was a report in the Economic Times suggesting that the RBI has raised some concerns about the health of the bank written to the government. Have you had any interactions with the RBI or the government specific to the bank's position right now, sir?
No, Ira, not on this particular matter. We, of course, continue to have regular interactions with the regulator. with regard to various matters, as also routine quarterly meetings that we have. And the same is the case with the government also, but not specifically in this matter.
All right, Mr. Nair, thank you so much. Very kind of you to take all of our questions patiently, helping us understand the position of the bank. That's KP Nair of IDBI Bank explaining quite candidly, actually, Neeraj, on where things stand at the bank. So Q4 is going to be painful. That doesn't come as a surprise to any of us. But, you know, confirmation there, provisions, some relief, of course, has come in on account of the Reserve Bank of India allowing staggered provisions on LCLT cases. But yeah, it's going to be a tough quarter, and the loan book will degrow just by virtue of the fact that, you know, some of these assets will go off the books.
Oh, okay. That's a complete lowdown on IDBI if you wanted one, really. By the way, as we speak, the markets have really done well, 0.5% higher for all the key benchmark indices, Sensex, Nifty, Nifty banks. We're looking very strong, tighten amongst the stocks, which is really revving up in the session. But I must say, Raymond has not done too badly either. And there's nothing better than a Swadeshi tie-up, says the chairman and managing director of Raymond. Gautam Singhania, speaking to Menka Doshi, he says that the clothing giant is keen on tying up with Baba Ramdev's Patanjali as and when it enters the apparels business. What he's definitely not going to tweak with its Raymond's male-only image. Here's a small slice of that conversation.
At least in the suitings business, which is your conventional business, before, you know, you've diversified into many different aspects of branded apparel, now the FMCG business, you are what, at about 80% market share in the suitings business?
I don't think it's prudent to say that, but yes, we do have a dominant market share.
You do, right? How do you, I mean, the responsibility of growing that market lies on you. That is your biggest revenue and profit contributor as well. How do you do that? How do you accomplish that? What is your plan on being able to grow the market? Because that's the only way you'll be able to grow your revenue and profit as well.
So, you know, contrary to what we believe that there's going to be a natural transition from fabric to apparel, the cost of apparel is more than the cost of a fabric and stitching it. Number two, the domestic profile of the person is so diverse from north to south to east to west that therein lies the opportunity to sell fabrics. And not only are we seeing our worsted fabric business grow, we're seeing our shirting fabric business grow in cotton. We're seeing linen come up as a very strong category. So much so where we were just doing a small amount of outsourced linen fabric to going up to setting up a facility to do linen
Which
fabric.
is Amravati, right?
Which is Amravati. So we believe that fabric across the counter will continue to do well. We're seeing a strong growth in that for a large base business, maybe 7, 8, 9%, somewhere there. But that will continue to be a strong space to be in.
Do you visualize a time, maybe 2, 3, 4, 5 years down the line, when your apparel business will probably be the same size as your fabrics business? By when do you think that might be accomplished by you? Is that a goal?
Surely it will be, because the growth rates in the apparel business are far higher than but the base is still small. So at some point the lines will intersect.
By when? Do
maybe,
you have
maybe
you
4
sort
or
of
5 years, I don't know.
4 or 5 years?
Yeah, but you know, we keep evolving ourselves and rechanging our targets, so it could happen sooner.
In certain segments of the apparel business, you've done very, very well already. In others, you have to yet make a mark. In women's wear, in traditional wear, these are all opportunities. Can you talk me through what your plans for each of these segments is?
So let's take,
you know,
okay, so let's take Raymond, for example. The Raymond apparel, or Raymond ready to wear, is really transcending in the same brand. So I'm not worried about it. Let's take Park Avenue. Park Avenue today is amongst the strongest brands in the ready-made apparel space, growing very strongly. If you take Parks for that matter, it's extremely strong in the multi-brand outlets, either doing 1 or 2. And in many counters, it is already beating traditional established denim brands as being the #1 denim brand in those markets, or in those outlets. So I think each brand is doing very well in its own space. Branded apparel, if I took the overall, I don't see why it should not grow anything between 20 and 25% a year.
Okay, and margins in that segment are not necessarily up to speed, right? I think so that's been an area that you've been wanting to work on for a long time.
So we've been through an investment phase, and obviously as you get scale, your margins will come, but we're really focused on product, the distribution, etc. I have no qualms that the margins, I have no issues that the margins will come.
So I think, for instance, let me look at your business segments, right? Branded textiles does a margin or will do a margin this year of 14% or more. I'm talking about EBITDA margins. Branded apparels will be 4%. What you call garmenting is about 9%. High value cotton shirting about 10%. The other two businesses are tools and hardware, and they're not comparable, so I won't get into that. So by when do you expect, let's say, branded apparels to come close to the 8-10% that some of your other fabric clothing businesses are doing?
Like I said, quarter on quarter we're seeing the improvement, and it's a dynamic situation.
Besides that, I think on the list of the many new things you were doing or you are doing and what the prospects for that are, is, for instance, Khadi. What is the growth potential for that? How big a business can it become over a period of time?
I think, we've really embraced Khadi. The organization has come together to do Khadi. In fact, today is the launch of the official Khadi collection this evening, and I see there's a huge potential.
It's a scalable business across the nation, or do you think it will be a very niche business in certain metros?
Why? Khadi is an USP from India. An international brand does not offer Khadi. So why can't I take Khadi international?
Is it more expensively priced than,
No, it's not.
There was some talk that you were also likely to be working with Patanjali. Is there any truth to that? Were you exploring any kind of...
I explored it. Whenever they do the apparel, we'll obviously be a preferred supplier to them.
Okay.
We're already a supplier to the, the Air Force, Navy, Army. So, if Patanjali is going to launch garments, I did meet Baba Ramdev. There's no secret. I tweeted about it. The whole world knows.
Yeah, no, I know. Yeah.
And nothing like a Swadeshi tie-up.
Okay, so have you had any kind of preliminary conversation with him at all?
Like I said, I have met Baba Ramdev.
Will it be fabric? Will he be looking for white label apparel? How would it work?
It's an exploratory discussion. At this stage, nothing more than that.
What about the scope for expanding women wear? That's an area that again has been a very niche part of your business, but for many other large companies comparable to yours in the retail space, women's wear has sort of grown at gallop speed, versus men's.
So there's that much focus you can divert. So let's talk brand-wise, and it's important I explain to you brand-wise. In the Raymond brand, women's wear is no. It's clearly a no, because we've done lots of research, and the male is very possessive about the brand, and the research has shown that he has clearly rebelled to the fact of getting into women's wear under the Raymond brand. It's very closely held by the male. In Park Avenue, we made an effort, so we have a women's wear range. It's done well, so we started it not so long ago, but now that it's doing well, I'm sure you'll see the galloping.
Okay, but I'm guessing it's a real fractional size of your business.
Today it's very small. It's peanuts. I don't think our women's wear in totality of the group is more than 50 crores.
So what's your vision for how large it can get, let's say, in the next 3 years?
It's not a priority for us.
It's not a priority?
Listen, at 50 crores, even if I add 20%, it's 10 crores.
I get it.
On the apparel base that I'm doing, if I add 10%, that's significantly more.
But if you wanted to dramatically scale your branded apparels business, women's wear would not at some point need to be 30-40% of that business, no?
I think there's huge headroom still in the men's apparel space.
I want to talk a little bit about the traditional wear that you're introducing and going to be focusing on. And it's, when I saw it here, it made me rephrase the question I was going to put to you, and which is that, at least from an advertising and brand perception point of view, brands like Manyavar seem to have stolen a march when it comes to the traditional wedding wear category. What's your strategy in being able to counter that? Will that be a category or a section that you will focus considerably on?
So since you raised Manyavar, credit to them, they've done very well in the space. But in any category, is there a place for 2 or 3 players? Certainly.
But ethnic wear has the potential to become a substantial portion of the branded apparel business?
Certainly. If you see Manyavar is doing 400-500 crores of sales, why can't both of us do 1,000 crores of sales? That market is there. Even if I take 50% of his market, it's still 250-300 crores of sales. I'm being very optimistic that I'll take his market, and if he's watching this show, he's not going to be happy me saying that, but that's it. That's life.
But your branded apparels business does what? Roughly about 1,500 crores?
Yeah.
Altogether. You're saying you can do 400-500 crores in a year or two just from ethnic wear?
I never said a year or two.
I'm trying to get what you think the scope of the opportunity.
What I'm trying to say is that when there is a market, You got to aspire to be at least 30-40% of the market. Otherwise, let's not waste time. Now, whether it'll happen in 2 years, 3 years, or 4 years, I don't know, because it's only our second season in the space.
Over the last several years, you all have made a concerted effort to get out of many of the non-core businesses. Is there anything that, because there are still 2 non-core businesses, one might call it that.
Show me the money. Show me the money, everything's for sale. We're in the business of generating shareholder value, and you know what? Every business is for sale for a price.
So both, you'd be willing to sell both the tools and hardware and the auto component
at a price,
engineering
yes,
business?
Of course. I've demonstrated in the past.
Yes, of course you have.
I have no qualm. Show me the money.
Are you actively seeking buyers?
I said, show me the money.
Is there any immediate plan to want to be able to...
I won't comment on that, but I'm telling you, we are very focused on creating shareholder value.
Part of the shareholder value creation proposal also includes developing your Thane land.
I got your question before you asked it. No comments.
Allow me to finish it. Developing the Thane land.
I told you we'll do whatever it takes to create shareholder value.
But are you planning to do that in joint venture with a development company? Because
I'm not at liberty to talk at what we're going to do with the land.
You spoke of corporate governance, and this is really the last thing I wanted to speak about. I know over the last 2-3 years you've put an advisory council in place, but the one thing that I think the conversation has not fully died down on is the rift in the family with regards to, I think, the situation with your father. Now, this sort of...
I'm not at liberty to talk about that.
Yeah, but this materialized with regarding a dispute in this very building that we were talking about.
Today I'm not at liberty to talk about it because of a court order.
Okay, but does that put this building under dispute is my question. I'm not asking about the individual family dispute.
Whatever is going on is in the public domain. I am not at liberty to talk about this because the court has forbidden me from talking about this.
So that episode is done with. Now, after the shareholder meeting, that is a thing of the past.
But it never affected the management of the business. It was an issue at the corporate level, but it was not an issue that affected the management of the businesses.
No, I think in one of the interviews you were quoted as saying that it was only when after the transfer of shares happened were you able to really be able to translate your vision for this company into action.
That is a fact with when you are eventually when it's your business, like in Marwadi he said, dhani kaun hai? It's who is the person who's impacted. And then you are able, this is a philosophical question, but then you can take non-political decisions. The buck stops here. The goods are mine, the bads are mine. And today I will do whatever it takes. See, I was telling another journalist in another interview on a different light. I've been there and done that. I've been associated with many images in my life. A motor racing driver, a socialite, a party boy, good time Charlie, whatever. I'm okay with it. I have no issue. I have nothing to hide from it. I'm in a phase of my life where I want to make a name. And I want to create a company which is really a legacy that's going to be left back as a national asset. And if you see the amount of change that I have made within, there's no insecurity today for me.
Okay.
Nobody can take my job. I'm the owner of the company. Nobody can take my job. And I will then when this happens to you, you'll realize that you'll take different decisions.
Sure.
Which are non-political. And today, to a great extent, the company is fully professional. So we've got a very good advisory board in place. Even a company like our FMCG business, I've stepped off as chairman. There's no insecurity that I have to hold on and be chairman. Mr. Rajiv Bakshi is chairman. We've got outside directors. The company is professionally run. Similarly, within Raymond, if you see, the board is getting restructured all the time. There's so much governance that's come into place. There's so much fresh input that's coming in, and everybody's open to listening. And I'm only involved as much or as little as I'm required.